Hi everyone. Welcome to another episode of Being CMT, the Chartered Market Technician. And we are doing this series for quite a bit of a time. And today we have David Keller with us. Um, to give a brief introduction, though we will ask him all the way his journey from how he started, but he has been the president at Market Technicians Association, CMT Association, and will be taking you along with his journey, how he has progressed in this financial market, what are the ups and the downs, what are the key learnings, uh, how much has CMT charter added, especially about technical analysis to sail through or navigate the gap. And as well, will request him to share a few insights as well along the conversation, which might be really helpful, though it has been helpful for me past few years since I've interacted with him. But yes, especially if you follow the work of David, I mean, his work is very key when it comes to behavioral aspects of technical analysis. So without further to do, thank you, David. Thank you for your time, and especially coming uh, just ahead of the holidays and giving us that few minutes of your time.
Of course, it's good to see you again. Pleasure to chat with you.
Thank you, David. Thank you. So, just a small introduction you would want to give about yourself. I want to start with how you started. I mean, it would have been a few decades ago, but still, I want to understand how you started and what got you into financial markets.
Right. So I've been in the financial industry for about 23 years now. I started in New York right around the tech bubble bursting in June of 2000. So when people ask me about technical analysis, I explain to them that I learned the technical toolkit. I read the John Murphy and Martin Pring books
Right.
as the tech bubble was literally bursting. And so my introduction to investing was growth stocks that had been so dominant in the 1990s in the US, just absolutely crumbling. And the investors that I had a chance to work with in that period that used charting and technical analysis were the ones that survived and thrived in a really difficult markets.
Right.
The ones that didn't and were just struggling were the ones that weren't paying attention to very clear signs of a rotation in the market. So it was a really good sort of real-time learning lesson about how to apply what I was reading in John Murphy and just recognizing the value of recognizing changing trends. So I was in New York at Bloomberg from 2000 to 2008. That's where I was taught about technical analysis, taught about the markets, had a chance to talk with people like John Murphy and Tom DeMark and John Bollinger and a lot of institutional investors that use those techniques day to day on the trading floors. And that was really, really helpful for me to just see how successful traders were applying the craft. And then in 2008, I was hired to run the technical research department at Fidelity Investments up in Boston. And I was there for about 8.5 years running a team of institutional technical analysts. And we worked with all the equity mutual funds at Fidelity and would literally use the charts every day to decide what stocks we should buy or sell on any given point. I launched my own firm about 6 years ago now, I guess, which is awesome. So it's still going, so that's good.
Right.
But basically launched my own firm to sort of help people understand that relationship, as you implied, between behavioral and technical analysis, how
Yes.
we think as investors, and then what tools we should use to address those. And then I was hired by StockCharts in 2019 to be their chief market strategist, and that's how I spend most of my days now, trying to help our StockCharts users make better decisions using charts.
Right, right, right. So, David, what are you currently into? You have had your 6 years. I mean, 6 years. We have seen probably a good bear market, 2020, and within a year we have seen a bull market. So, how has
Yes.
been your current journey in last few years, and your
Yeah.
current company? What are you into? How is your stock charts and
Yeah. No, thanks for asking that. So, and what's funny is I feel like I've been doing this 23 years overall, and I feel like I'm still learning and growing as an investor. And I will tell everyone, because I know everyone watching is involved in some way, most likely with the CMT Association. My first CMT meeting that I attended, which was probably 2001 in New York, I remember being in the meeting and there was a presentation, and then a couple seats down, and a gentleman who was probably in his 60s, which is, I'm getting closer and closer to that age myself, but he seemed like an ancient dinosaur of an investor. And
Right.
he was asking questions of the speaker after the presentation. And it hit me as I watched him, like, I'm in my 20s. Here's a guy 40 years later that's still learning and still asking questions. And what a really fantastic, experience that would be, to be able to grow over, years and years. And I found that 100% in my experience. So what's really cool is, in the last 6 years of running my own firm, I've grown and been able to learn, which is what I love, because the markets are always changing. And I would say what has become more and more of my focus has been routines and how we spend our time, and helping investors think about what charts and what information you look at and when. And so, sort of setting up my morning coffee routine. So I have the coffee here. And so just before we started, I go through the charts, and I start at the same set of about 100 charts. And I go from start to finish, and I review, what does this say? What does this say? What does this say? And by doing that same thing every morning, you have a really good sense of what's happening. And then I have a weekly routine, which I do every Friday. And then I have a monthly routine, which I just did at the beginning of this week, which is taking a step back and looking at weekly and monthly charts to see how things have evolved. And so I would encourage people, listening, to think about how you spend your time as an investor, because for me, 2021, sort of that bull market phase off of the lows, it was a very clear setup of a strong uptrend with leadership names, with positive momentum. And then 2022 was so different, right? And if you just watched the charts in November, December of 21, January, February, March of 22, such a clear difference from a strong market to a weak market. And I attribute my experience going through the CMT Association and just applying those rules consistently that really helped me to navigate that period, I think, pretty well.
Right. I must tell here that if you have missed CMT Asia Pacific Summit 2022 in November, David had first presentation. So I had a very clean notepad, and the first notes I made was from David's presentation, and he actually pushed us closer to discipline, right? Because what he said, his comments were very clear that this was his routine on daily basis, and you shared that. And that's where I thought that on a behavioral aspect, that is going to push a trader very close to discipline, how to discipline, right? So thanks for that. I believe that it's very important when we are into technical analysis and the first job we do, right? Because your first job, where you learn all those aspects of technical analysis and then get to apply. So how was your first job? I mean, you must have been fascinated by the markets. And when you got into the first job, what were the key learnings that you still have that made sure that you're going to have such a long career? And these things are a must to practice technical analysis for such a long time.
Ooh, that's a really thoughtful question. I love that. So a couple thoughts. So my first job was at Bloomberg, and what's really cool, talking with others like Akshay and others who haven't been at Bloomberg or at Bloomberg, we have a similar experience. It's a very collaborative environment. There are a lot of people there that know technical analysis, and so talking with people like Greg Tan, who is in our Singapore office. Trying to think who all was involved there. We had a technical analyst in Japan, one in Sydney, a couple in London, like Guido Riolo, in London that I would speak to often, Trevor Neal, and then in New York as well. And so finding a community of technical analysts was really meaningful. We were very lucky at Bloomberg that we had a sort of a little mini community, but I immediately found living in New York, and if you're in Mumbai or a major financial center, you're probably very lucky with a thriving community of technical analysis. But finding others that were trying to answer the same questions I was really, really helpful. And I had a couple mentors. The one named Greg Burns, who many of you probably don't know, he actually still works at Bloomberg. He works on the trading side of Bloomberg at this point, but he introduced me to the CMT program. I'll never forget, I realized that I wanted to grow as an investor. I wanted to understand things better, and I started looking at the CFA. And he looked over my shoulder. He's like, no. You really want to understand what's happening, you need the CMT. And I was like, oh, okay. And so I checked it out. And I was like, oh, yeah, this makes sense. And I never stopped. It's just sort of, it helped point me in that direction of focusing on trends and investor psychology. So first thing I would say is finding a community was really helpful for me.
Right.
The second thing was asking a ton of questions. So what was very fortunate about where I started was my job was to go into trading floors and hedge funds and financial institutional investing shops and teach them how to use the Bloomberg platform, and particularly teach them how to use technical analysis. That's when I was called in. So someone was trying to use RSI to analyze a stock, and I would explain what it was and show them how to set it up and what sort of signals you would be paying attention to. But what I also did was I would ask questions anytime I could. So I'd ask them, what are you trying to do? Like, why are you trying to look at IBM? What's the fundamental story for Walt Disney or Apple or whatever? And it really helped me to think about how technical analysis is not just on its own. I think it's part of a broader investment process, right? There's fundamental analysis and macroeconomic analysis and maybe quantitative analysis. I would argue behavioral analysis and then technical analysis, but understanding how it relates to everything else is really important. And that's where I think the CMT has done a really good job of talking about that gap between a fundamental valuation and where things are at. And I always tell people, the market never just immediately goes from where we're at to where we should be based on some valuation. It's a rocky path, and using charts to navigate that is so much better than trying to do it just through guesswork. So that would be my takeaways from my early career would be finding a tribe, finding a crowd, a group of people that are looking at charts. That was incredibly helpful, and I definitely found that through the MTA at the time, the CMT Association, and then ask questions. And people like yourself and others I know it was so good to see so many of you in India in the fall at the Asia Pacific Summit. But ask questions of people that have been doing it longer than you have, and you'll have a lot of opportunities to learn that way too.
Right. So it's a continuous process, and finding the community is very important.
Absolutely.
Right. So, David, since you have been one of the people who have done in this CMT program, what were the key changes in your decision-making process were added? I mean, obviously there was weight of evidence that must have been added to your decision making while analyzing a chart or putting some fund or rotating a fund to a sector or to stocks. So what were the key changes that you noticed in your decision making skills?
Yeah. Really good question. So what's interesting is when I was taking the CMT, which is sort of the early mid 2000s, and we lived in New York, my wife and I were newly married, and I was taking the CMT and my wife was taking the CPA, which is the accountancy exam, right? And what was so funny was we were reading every night, we'd have dinner, and then we'd sit down for hours at the table and just be studying. And she would be complaining the whole time about she was studying like law and auditing and all the consulting, all these things that had nothing to do with what she was doing, trying to help companies, with their tax liability, basically. So she found it to be this completely not helpful exam. I was having the time of my life reading these books, and then I would go to work the next day and immediately apply it. I'd read about candlesticks, and then I'd go use candlesticks, and I'd think about Toyota versus Honda versus GM, and it completely helped. I mean, things made more and more sense the more I studied. So I would say that the CMT, first off, it helped change me because it opened my eyes to just all the different tools that we have available to us. And I would say it's not like the CMT forces you to use a bunch of things. I think you have to learn all those different components, Elliott wave analysis and, bar charts and candle charts and point and figure charts, all these different things. But at the end of the day, I came out of it with a much more well-defined toolkit. I had a checklist that I thought I could follow pretty consistently. So if I wanted to buy or sell a stock or an ETF, I had a pretty clear picture of what I would want to look at to make sense of that. And certain things like point and figure charting, which I'd never really used before the CMT, I sort of fell in love with. Like, it made sense, and it helped me think about, it was a great way to screen for stocks that were breaking out. And that was a really nice addition. Something like Elliott wave, I studied it and learned it, and at the end thought, that is not how I'm going to approach the markets, and that's kind of fine. But by studying all those things, I was able to have a much better, more thoughtful approach to how I analyze the charts. And I think that has been probably the biggest transformation that I experienced. And, after the CMT, I've taught technical analysis at the collegiate level, and I've lectured a lot at it. And what we do is we basically talk about that checklist and how you start with the basic analysis of trend and how you actually define entry and exit points using charts. And I think the CMT helped me sort of formalize that list. And before that, I would say my process was undisciplined and much less successful.
Right, right. Thank you. Thank you for that, great experience. So a lot of candidates do come into CMT, probably there are some expectations, some are realistic, some are not realistic. But during the process from level 1 to level 3, there are many aspects of the TA. A candidate is exposed to, be it charting, be it system evaluation, or the behavioral aspects, or some noiseless charting as well. Though amid all this learnings, what would be one piece of advice that you would give to a candidate, be it any level, or even someone who's looking to take up CMT or write CMT? Is it the risk management? Someone would say risk management is 80% of the overall process. Someone would say mindset is 80%, and remaining is 20% is a skill or system. What would be the one aspect of technical analysis should a person keep very close to himself and continuously monitor that, so that mastering one aspect should actually average improve the average out of all the remaining factors? So is it risk management, behavioral aspects, or other aspects which you would want to share?
That is a really challenging question because it's hard to pick one, right? You mentioned a number of things that I think are so valuable. So I would say, I mean, my answer probably comes from the fact that I've spent most of my career working with people who are not technical analysts and not technically oriented traders. I've worked with, fundamentally oriented portfolio managers or brokers who are trying to use charts, but it's not a core part of their process. So a lot of what I've had to do is think about how we take this toolkit that I believe is a very effective toolkit for analyzing the markets, but demonstrate to people that are unfamiliar why it makes sense and how it should be part of your process. And I've usually come down to one of those two arguments, which is the behavioral implications, which is the fact that we are hardwired to make really bad decisions. And here's a set of tools that will help us make better decisions or make less bad decisions, I guess is the way I would describe it.
Right.
And I would say the other part of that is managing risk. And that's probably what I would end up answering if I had to pick one. Because as I mentioned, when I started in the industry in 2000, 2001, it was a really challenging period as an investor. And the people that I worked with that were using technical analysis really, really successfully were the ones that were using it to clearly define their risk and to recognize when the trends were no longer working in their favor. So probably, I guess my answer is combining the behavioral and the technical, because what happens is when the market moves against us, there's this thing called the endowment bias or confirmation by so many that cause us to hold on to something and ignore the clear evidence. So what I always do when I'm trying to talk with someone who is not familiar with technical analysis, I sort of go through that story. Have you ever bought a stock that works really well and then it stops working well and something changed, right? How did you recognize that position was no longer working? How did you lock in your gains and minimize your losses? And I show how a pretty simple technical approach is really effective at doing so. And so for me, I think that's the way. It's not as much as we want to think about what's the next great thing, what's the next, like what we'd call, 100 times earn, or what we call a 10 bagger, something that's going to go up aggressively. That always sounds like a fun thing to do, and it's great when it happens. But I've found the value in technical analysis is more getting out of things that are no longer working and surviving to invest another day. And so that's, I would say, what I would focus on as you're learning the CMT is think about how it helps you define your downside and limit your losses. And that is such an important part of money management skills.
Right. So yeah, absolutely. So money management skills, I guess that is also one of the key aspects, and behavioral aspects is what David would want to. So David, just an advice to CMT students that how do they sail through level 1 to level 3, and one or two key sentences that they should focus on, just like how the transformation is, in summary, that they would feel after pursuing this. Because I've met a lot of candidates who have done level 2, and due to their professional responsibilities and personal, they have never been able to complete that. And we are trying to talk to many people who have given up the idea of pursuing taking up level 3 because of these commitments. So any inspiration or motivation that you have had back in that time in early 2000, or still you would want anyone to pursue? So any piece of advice you want to give to CMT candidates?
Yeah, no, really good question. And I would say that what's really interesting about the CMT in three levels is I think it addresses the three things we should be trying to do as a technical analyst or as a technically oriented investor. You need to understand the markets. You need to be able to analyze the markets consistently. And then you need to be able to communicate what you're seeing and what you're hearing, right? You need to be able to take all the stuff that you use to analyze markets and actually be able to communicate that to a client, to a peer, to a colleague, to someone else. And those are really the three tasks you're asked to do as an analyst. And I think those three levels of the CMT sort of go through that journey. In level one, you're taught how to, what the markets are, right? As defined by trend and price movements and breadth and sentiment. Level two is where you really learn how to analyze the markets effectively. And I think
Right.
after the level two, you feel like you have a good sense of what's happening and you're probably less confused as to what's going on in the markets day to day. But you're not really equipped yet, I would argue, to apply the technical toolkit effectively. And the big part of that is actually communicating that with others. And that's where the level three was transformative for me. It was taking all of these books that I've read and all of these charts that I've looked at, but actually being able to communicate in a concise and understandable way. Here's what I'm seeing. Here's what you need to do. And here's why. That's what I do 100 times every day is look at a chart and then explain it to someone else. And that the level three exam was so important at helping me understand how to boil down a lot of data, a lot of information into a concise, thoughtful investment thesis. So I think that's a beautiful way of wrapping that up. And my piece of advice for someone trying to go through those levels, what I did with my group of peers that were all going through the CMT at the same time was every day, to be honest with you, we would go in a conference room. So find some way in a Zoom room or something and look at charts, talk about what you read the last night or the last week and look at charts. So what we would do is read about a set of tools and then we would analyze, okay, today we're going to analyze global equity markets, and we would look at the Nifty and the Sensex and the Nikkei and the FTSE and all of the different global indexes. And then the next day we'd read it. All right, we're going to look at the dollar and the yen and the rupee and all of these different things. And by applying those, not just reading about them, but then just analyzing the charts. And we would have to present to each other, here's what the charts. All right, now we're going to analyze car makers using just Elliott wave, and we did it, and we'd have to explain to each other. And that process was probably the most effective part of taking what we were reading but actually making it real and making it practical and making it current with what we were seeing. And the last thing, I maybe just as one other brief suggestion, if you think about it, all the charts that are going to be used on an exam, I would assume, are charts of markets, right? So they're things. So the more you look at charts, the more you analyze markets, the chances are you've probably seen something and it'll be like, oh yeah, I remember that wave pattern. And so we definitely found that analyzing current markets was just a great way to keep current and apply the lessons. And that was super, super helpful as well.
Yeah, right. Just a quick question: how many books you had to read to complete the level 1, level 2, level 3? Because current the curriculum is presented in one concise book,
I know.
right?
So
Yeah. So
I
how many
remember
books?
I was on the board when we moved to a custom curriculum. It was my favorite moment ever because you can see the books maybe stacked behind me. And this is what my whole life is like. The books in the background got bigger and bigger. So every level was about 3 to 5 additional books. And so by the end of it, I think I had 20 books that I'd gotten just to get through the CMT exams. And I mean, a lot of them were very interesting books, but it was a lot. It was a slog of going through a lot of different books and a lot of different formats and trying to sort of connect them. And I think what's great about the curriculum now is it's much more well designed in that it's consistent. It really helps you go through that journey. So but yeah, what I loved about it then, what I love about it now is I'm still buying books and I'm still reading, and people like Brian Shannon are coming up with new indicators like the anchored VWAP, which I'd not experienced before. And I think that's a really cool part is the toolkit will continue to grow as you grow as an investor.
Yeah. Thank you so much, David. It was great learning, right? I've grabbed few statements for myself from that conversation, which I will particularly think upon. But thank you so much for your time. We have had a lovely conversation. I think it will be really beneficial. Probably people, especially coming down at a very young age. I'm talking to candidates who are 20, 21 years old, and they are in level one. One of the candidate recently passed level three. She was just 22. So yeah, and they have a lot of things ahead. So I mean,
Yeah.
someone experienced like you, so probably they'll have those 20 years in this few minutes. Thank you so much for your time, and hopefully we can bust a lot of myth and help many on the way.